You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know the drill. If you want to go deep into the archives, the website, the app are the best places to do just that. Go back pretty much 11 years worth of content up there for you guys to sink your teeth into, including many years of volatility views, great guests, all the other fun stuff. If you want everything, subscribe to the network on your platform of choice, and it'll be delivered on your schedule: iTunes, TuneIn, Stitcher, Pocket Cast, all that fun stuff. And of course, if you want to join in on the conversation live, it's every Friday, noon Central, 1 p.m. Eastern, via Mixlr, Mixlr. Get in there, ask questions, see how the sausage is made. We like it. It's kind of fun. I think you will as well. And of course, however you listen live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do like to hear from you guys. And joining me on the old program, my cohort in volatility crime, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Greasy Meatball, welcome back to the program. To you, sir. How are things in the land of the pit?
Good. I'm not sure how I feel about being told I'm a partner in a volatility crime. Because I want you to know that I have nothing to do with VIX settlement.
Actually, it's an appropriate subject for today's topic. So I think without further ado, we got a great guest waiting in the wings. Let's get right to it with our Volatility Viewpoint segment.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
All right, everybody, welcome to the Vol Viewpoint. Like the man said, this is the portion of the show where we break down the world of volatility, and we welcome on guests from throughout that world to pick their brains for the benefit of you, the listener. Today's guest is a newcomer to the program and indeed to the network. He is Tom Lee, the Managing Director of Investment Strategy and Research over there at Parametric. Tom, welcome to the Volatility Views program.
Thank you, Mark. I appreciate being on the show.
And Tom, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the volatility space and what it is that you do at Parametric.
Sure. So I've been at Parametric for, actually this June will be 24 years. Just by way of background, Parametric is a asset manager. We manage for institutional, retail, and high net worth or family offices across the U.S. and increasingly across the globe. We manage about $230 billion. A fair amount of that is in volatility-related strategies. Specifically, we manage about $17 billion in strategies that are centered around one way, shape, or form harvesting the volatility risk premium. We also provide customized risk management solutions, primarily to institutional investors, think pension plans, some endowments and foundations who are looking to manage their risk in a more granular fashion, which often involves using options to hedge. And typically that's in the equity space.
You mentioned the buzzword of the last couple of years, actually, in the volatility space, which is harvesting the risk premium. I was joking with someone just recently this week in the studio about how that was kind of the topic du jour at just about every volatility event, volatility conference you wanted to go to for the past couple of years until about February, where we didn't see as much of that anymore. Starting to come back, though. We'll get to that in a little bit. But, of course, interesting times for said harvesting of the risk premium. What is your preferred methodology to do just that over there, Tom? Are you guys doing cash-secured puts? Are you doing something else entirely? What are you guys doing to harvest that risk premium?
So we sell index options, both puts and calls, sometimes in combination, sometimes one, either just the call or just the put. Depends on the specific objectives of the client. So we have clients who use us to, they own an equity portfolio. They want to sell calls on top of it to add value, manage cash flow. Maybe they're not as overly optimistic about the future outlook for equities. We also have clients who hold cash and don't want to participate in the equity market at this level, and will use puts as a way to monetize a contingent buy into the market and collect that premium as long as the market is staying above the strike. And then we use blends of those two to kind of achieve a different risk return objective for institutional investors primarily.
So you're kind of doing a bit of a custom overlay approach then for a lot of these clients, and if they want just the income, you do the covered call. If they want the put, they get the put. If they want a combo, they get both. So a little bit of custom trading. You mentioned a lot of index overlay. Do you trade a lot of volatility products over there as well, or do you get your vol kind of like you mentioned in other ways through SPX or SPY, that sort of thing?
We do have strategies that utilize VIX futures, so we do trade it in that way. We don't trade many things like variance swaps or VIX options too frequently. And I would, to your other point, Mark, I would say that customization is very much part of the DNA of Parametric. We're seeking to provide solutions to specific needs of clients.
And Tom, one of the reasons we wanted to have you on, in addition to your thoughts on the old buzzword of harvesting the risk premium, you guys over there at Parametric have leapt into that most heated volatility phrase debates right now as well, which is, of course, this ongoing brouhaha about the VIX. Mark kind of alluded to at the top of the show with the settlement. In fact, you put out a paper not so long ago called VIX, Is It Rigged? So you're kind of diving headlong into that. This is a topic we've discussed quite a bit here on the show. I think some of your conclusions are in line with what we've been saying, but why don't you break down the kind of the thesis of your paper for our listeners and what some of your thoughts are on this very controversial topic?
Yeah, thanks, Mark. You're probably doing it more justice than it deserves. It was really a blog post that we put out on this very subject. Given the nature of our business, as I just described it, we have a number of clients who are interested in volatility and who are following it. And as you're aware, there was a number of articles coming out talking about the VIX and was it broken and the problems with VIX settlement. But some of that was escaping kind of the general understanding of the market. And we were just trying to lean into that a little bit and say, okay, listen, we understand that at settlement there have been, we'll call it messiness, that has occurred. We don't want to take a position on whether it's people manipulating the market or the CBOE's position, whether it was normal hedging taking place. We didn't want to wade into that pool. Really, what we wanted to say.
Why would you want to wade into that pool? How can you lose diving into that one? We didn't. I guess that's a lose-lose.
Yeah. Our purpose was more to point out that that it wasn't an indictment against the whole VIX complex and people who were using VIX broadly but weren't subject to settlement, weren't being exposed to it, which I think was a point of confusion that existed in the market for people who weren't following it as closely.
Yeah, you're right. That's kind of a point we've hit on quite a bit on this show. I'm glad to see others kind of taking that ball and running with it. It's a very hot topic, and rightfully so. This is a very popular product. People need to know if they can have trust in the issue. But at the end of the day, you're right. It is around the settlement, and as we've mentioned many times, there's a very small percentage of people or traders or firms out there who are actually riding through that settlement. If you're at all savvy with the product, you're going to roll ahead of time or get out or close out positions, exit positions ahead of that. Just because the settlement by itself can often be a rocky experience with or without any sort of alleged manipulation. So why expose yourself to that if you don't have to? So I'm glad to see you're on the same boat. You also do point out in your paper as well that you could kind of concede how some people may think some of this paper might be a little bit, shall we say, coincidental. Would that be your word for it?
Yeah. Look, we're the first to acknowledge that option trades being submitted at the last minute, large option trades, which move the index on the day of expiration, those are suspicious. I acknowledge
they are very suspicious.
Yes, yeah. But what we're saying, and Mark, I think you made the point, those events occur around settlement, and if people have closed out positions or move forward, it's not an indictment against the VIX on an ongoing basis. It's not an indictment against the options which are used to calculate the VIX. It's a small period around settlement, and that was, that's where it is isolated to.
Well, and that's you make it a really important point in that that settlement is just one event, and really there's not a lot of awesome reasons to be involved with settlement. So, so leave it alone. Don't if things are that bad, don't get yourself involved.
And that is one of our conclusions. And although I didn't say it in that paper, it's not the only market where settlement is subject to concerns like this.
Right. No. And actually, I had an interesting discussion with SIBO itself the other day, and what I told them is, I think I've got a solution for your problem here, and they were like, well, what's that? So I laid out why don't you close off the settlement to like the general, to opening orders or things like that at 8:15, but then reopen it at 8:20 and only allow counter orders to be entered. So everybody that's going in for the opening auction, if there's an imbalance, open up that imbalance to the general public at 8:20. You would have a whole host of funds and other people that would be willing to provide liquidity against those options in both in VIX, and I think that would make a huge difference in how effective that, and how it would certainly reduce the volatility of settlement, which is really the prime issue for what's going on right now.
No, I agree, and I hadn't thought about the point you're raising, that process. It's interesting. I think it's worth exploring. Did you get any feedback from the CBOE on that? They
said we hadn't thought of that, and I said, well, you should. It would do a lot of good. And so they're actually, the only thing that was told to me was they'll talk about it. So it's hopefully they'll get something out of that.
Well, it seems to be that the pressure is rising for them to address the settlement issue. If I'm not mistaken, there's 2 investigations ongoing right now.
Yeah.
Into this, so it feels like one way or another we're probably in for an improved process coming down the pipe here shortly.
Yeah, that would be great, because the VIX really is a great product, and there are a few let's say sensationalists that are trying to turn something that is really a limited issue, like very, very limited, right, into some sort of the whole VIX is some evil thing, when in fact VIX is a wonderful hedging instrument and a spectacular, a spectacular thing to play with. I really enjoy trading VIX, and I think most people would if they kind of figured out really what that index is all about.
Mark, you're right. It's funny because it just goes back to that whole quote-unquote whistleblower a few months ago who came out, and he was going far beyond just the settlement being rigged. I believe, and again, I haven't read all of his allegations firsthand. Has kind of been filtered through me, so a little bit of a game of telephone going on there. But he's alleging that things can be manipulated, throughout the day and without trading. At least at the very least, you have to trade to execute this quote unquote manipulation of the settlement. You have to actually trade some options, some products there. He's alleging all sorts of other things. So it has gotten a little bit outlandish and out of hand. And this notion that this thing is being wildly manipulated and driven throughout the day to all these different degrees by these, effectively the Illuminati of the volatility space. It's gotten a little bit out of hand. You're right. So it's kind of be interesting to see. I do welcome these investigations. I said this from the beginning. I was hoping FINRA would do this. And when it became clear that FINRA wasn't, I'm glad that the SEC and the CFTC have stepped up, because there needs to be, at the end of the day, I think transparency is good for everyone. If there is some sort of flaw that is in the settlement process, let's figure it out and let's make it transparent, because at the end of the day, the product is good. People want to trade it and they want to have faith in it. So if you can restore that faith, that's a good thing. Now, I do like your suggestion, Mark. It would kind of show the hand of the settlement, if you will, coming out and give people, if they didn't want it to go that way or they wanted to be contrary, a chance to counteract that. Is that kind of your goal?
Yeah. Well, my thought is that if you open up those imbalances to the general public, somebody that's trying to buy 12,000 puts that are borderline worthless, he will find himself, probably a firm like Parametric would love to sell those settlement puts to whoever is buying that stuff. Stop me if I'm telling tales outside of school, but a lot of these overlay funds and premium harvesting funds, if they got a call from a broker saying, hey, how would you like to sell puts through the offer that are 1,000 points out of the money? If I was a premium harvesting firm of the size of Parametrics, that would brighten my ears and put a smile on my face. So I think there's a lot of parties that would want that. So it would take the volatility out of the settlement, and it would make any manipulation, if there is any, a lot harder.
Tom, any final thoughts here for our listeners before we roll on here from the Volatility Viewpoints? What would you like them to take away from your paper, from your blog on this topic, and what should they really be looking at the end of the day?
At the end of the day, right, and it sounds like we're somewhat aligned with the statements or the way you've been pushing previously in this format. It's not an indictment of the entire VIX. It's a narrow little window around settlement, which most people aren't subject to. We believe in the viability of the VIX and the volatility market more broadly. Don't believe it's being manipulated more broadly, and do welcome more transparency into the market, and think it serves all investors better.
At the end of the day, sunlight kills all these problems, right? At least that's the plan. Well, Tom, I'm glad we can get you on. You can always tell a genius because he thinks exactly like you, right? At the end of the day. And if listeners are interested in learning more about these custom overlays, harvesting the quote-unquote risk premium with you guys at Parametric, or anything else that you do, where should they go? What should they do? Maybe they want to read more blog posts from you guys. Where should they go? What should they do?
They can go to our website at paraport.com and access all that information by clicking through.
There you go. Perfect. Well, Tom, glad we can get you on the show here, and we'll look forward to having you back on maybe once all this is behind us in the rear view mirror, where you could come on and discuss your thoughts on that, and as well as maybe some of your thoughts on harvesting the risk premium going forward. How does that sound?
Mark, that sounds great. And listen, you guys have a great holiday weekend. Thanks so much.
Hey, you too. Thanks for coming on. You did great job.
Thanks for coming on, Tom. That's going to do it for our Volatility Viewpoint segment. Now we're going to keep on rolling right on into our Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. Interesting conversation, was it not, Mr. Meatball? You know, I always like, it's always fun to have a guest who agrees with you. That's kind of fun.
Yes, that's the best of it, right?
The best kind of guest is the one who thinks just like you. Now, of course, listen, a lot of people are weighing in on this fray, and we shall see how it plays out. Again, these investigations coming, I think it's a good thing for everyone at the end of the day. As we're kicking off here, the rest of the show here, we are, Mark, you and I are evenly split here on the crystal ball. It was looking my way. It was well north of the 13 handle, getting perilously close to 13 and a quarter, which would have been yet again a second week of a bullseye for me. As we started talking in the Vol Viewpoint, it came off a little bit. So now, right now, as we speak, we are exactly at 13 in the VIX Cash, which means you and I are exactly equidistant. I'm at 13 and a quarter. You're at 12.75. So we'll see which way you think it's going to break, Mark.
I think it's going to break my way.
We'll see. I wouldn't be deeply offended by that at the end of the day. But yeah, you know, it's funny when I made my analysis last week. As soon as the show was over, I was like, oh, I forgot that Monday is a holiday week, so I probably would have leaned a little bit lower if I had added that into my analysis. But c'est la vie, we're still looking pretty good, so I'm not giving up on my 13 and a quarter. But it's ticked 13.02, Mark. That's it. You're out. All right, let's look here at what's been going on in the week that was, and indeed still is, from a vol perspective. As we're recording this and streaming it live, getting close to 12:30 p.m. Central Time here. Most of the major indices kind of mixed. S&P off about a third of a percentage point. Dow similar. The tech-heavy NASDAQ actually up about a third of a percentage point. All this mixing on the street means VIX Cash getting a little bit back, actually, today, going into the long weekend. You don't see that too often. Maybe things got a little bit overzealous earlier in the week in some of the vol driving, gaining about a half a handle, like I said, right around the 13 even level right now. So we'll see which way it breaks. How about this? If it breaks a nice quarter of a point or so right by the end of the show, and then it can just get annihilated for the rest of the day. I'm totally cool with that. So let's keep one of those in mind here for the rest of the day. Of course, our old friend VVIX hovering right around a 92 level, so just a little bit shy of where it was at this time last week. Actually, a little bit north. It's about a point and a half higher of where it was last week. We've kind of been in this low 90s range for quite a while here on the show. Interesting stuff out there. Mr. Meatball, what has been catching your eye in this interesting week heading into the holiday weekend, sir?
I think the most interesting thing about this week is oil. It's really non-equity, right? Equities have done nothing. What's been fascinating is take a look at oil and treasuries and the dollar. The dollar is flying around, was running super hot at the top of the week, and meanwhile oil was staying stronger, and then the 10-year started to sell off, and then oil started to sell off, and the dollar sold off. Normally, when the dollar gets softer, what happens to oil? It gets stronger. But not right now. Oil is really getting soft. You look at a name like XLE. Our friend Mike Tues is probably not so happy with what XLE is doing because he's likely taking a bunch of delivery, or maybe that's what he wants. You know how Mike Tues is. We love him. But yeah, there is a serious slapping going on in oil. And so that is what really is causing this disassociation between the S&P and the VIX.
Yeah, these are weird times for crude. If you like crude, stay tuned. In about an hour, listeners, our TWIFO show will be kicking off. We'll do a deep dive into crude right there. But yeah, these are weird times. We have people talking overseas, Russia and others, about increasing production, going to drive down prices a little bit. We also see usually WTI production here in the U.S. and the shale stuff can also add to that supply, but they're limited in how much they can actually ship. They're kind of reaching max shipping capacity. There's other stuff going on in the shipping world, and of course the dollar. All of this is kind of mixing together in this heady stew that is crude. So if you want to talk crude, you want to talk crude vol, all that fun stuff, stay tuned in a little bit, listeners. We'll get into all that fun stuff on TWIFO. Looking here at ye old VIX futures. We got about a little bit less than a point. We got about 8/10 of a handle here between out there in the June future and the cash, and about 1.5 between the July future and the cash. So nothing extremely aberrant to write home about out there in VIX futures land. Moving on over to the options. Bit of a quiet day today, bit of a pretty much a quiet week. As we're going into this holiday weekend, we got about $1.63 on the VIX options tape. The ADV holding steady around that 577 level, just shy of 600K. Remember earlier in the year, right around February, surprise, surprise, it got up to around 1 million a day, and it was lighting it up for a while. Things a little bit quieter now. It is, of course, Memorial Day, the start of the big holiday season, or excuse me, the summer season. So we do see usually and volumes tapering off a little bit around this time. Rest of the week, a similar story. 346K yesterday, about 356 on Wednesday, 278,000 options on Tuesday, Monday. The leader of the week, 501,000 contracts. Nothing coming north of the ADV this week. The put to call hovering right around, I should say the call, the put out here in VIX land, hovering right about a 2.9 to 1, so a little bit higher than it has been of late. It was down around 2.6, 2.5 to 1 for the better part of the last month or two, and now getting a little bit north. But if you know anything about VIX, you know that that's nothing. It can get well into the 4s and beyond before people really start paying attention to such things. In terms of what we're paying attention to out here, what are the hot VIX strikes? Number one with a bullet out here this week are the June 20s with about 235,000 contracts open. Number two, the first put on our list, the June 15s, 206,000 contracts open there. Number three, the June 21s, $1.67 open there. Number eight, almost literally tied, 30 contracts separating them with number four, the June 30s, ever optimistic June 30s, $1.67 open there as well. Number five, the second put on our list. Got a few puts on the top 10 this week. The June 13s, 155,000 contracts open there. Number six, the June 25 calls, $1.50 open on that strike. Number seven, the June 27s, got a little bit lofty there, 149,000 contracts. Number eight, coming back down to earth with the June 15 calls, 141,000 contracts. Number nine, the ever optimistic July 30s, the 30 strike, popular one, both in June and July, 135,000 contracts open there. Number 10, round out our top 10, the June 14 puts, about 132,000 contracts open, about 6.7 million contracts outstanding, about 5 million on the calls, and about 1.7 million on the puts. If you like all those fun VIX breakdowns yourself, you want to run that for yourself, Trade Alert, great place to do. You can add it all up yourself, but it's a lot of work. Get on over to Trade Alert. They'll do that addition there for you. Speaking of addition, Mark, what's been adding up in your VIX options world this week? Any interesting trades lighting up your own personal tape over there at Carmen Line this week, sir?
Couple interesting things I saw today. This week we saw a customer buy the 14 straddle, which I thought was interesting. There was a big VXX 70-90 call spread that traded, which is always interesting. And those were the two main ones I saw. So, nothing else super crazy.
Speaking of our friend Mr. Schwartz, he's in the chat. He's agreeing with you, Mr. Meatball, and he sent us something. What did he send? Oh, a chart of USO volume. Yes, USO. We were talking XLE, USO, the much maligned other way for a lot of people to play their exposure to crude. The ADV getting pretty rich out there these days in USO yet again. So all you guys out there like playing your crude, maybe you don't want to play WTI, you want to play a little XLE or USO, we got you covered there as well. Let's move on to everyone's favorite ETP in the VIX space, VXX. That's beloved erosion kicking in yet again. We're about a point below where we were this time last week, rather a little bit shy of 34. 33 and 3/4 or so out there in VXX land. as they came for a lot of the vol, they came for a lot of the VIX futures this week, and that translated into a lot more of the ye old erosion kicking in. About 137,000 contracts out there. VXX averaging about 311,000 these days. So pretty, actually right now it's exactly even, 68,000 calls, 68,000 puts going up today in VXX. So no clear bias out there. People always say no one loves VXX calls. Today's activity would dispute that, at least. Speaking of which, Mr. Meatball, since we're talking VXX calls, I ask you all the time, we talk all the time about VXX puts. That's where kind of the lion's share of the audience interest is out there. But let's flip the script a little bit. I think I might have given you this one before. So maybe if you dig deep back into your archives there in the old brain, maybe you'll recall it. If you had to pick, I'm looking at the top 10 here right now of options positions, open sizable positions at VXX. If you had to pick the first call that would show up on that list, what would you think it is?
I'm going to go out. I'm going to say the January. Ooh, debate. Like, I think was the January 50s or 60s or something like that.
So your brain does work. You do remember things on occasion. Yes, the Jan 50s, about 39,000 contracts open there. They are the number 7 overall position out there in VXX land, still dwarfed by our old friend, the 10 puts, which continues to add OI every week. Probably not hurt by the fact that they're 2-3 cents right now, so you could buy a couple hundred at a clip if you were so inclined and not really sweat it. 201,000 open of the Jan 10 puts. Then it falls off a bit. The Jan 15 puts actually number 2 with about just a little bit shy of 100,000, 91,000. Then the 5 puts, that's getting really far out. They haven't pulled up a quote on those. I'm not sure what those are going. I bet you can get all you want for a nickel, or excuse me, a penny out there on the 5 puts. The June 20 puts, number 4, about 57,000. Number 5, the June 35 puts. So some June puts out here as well, which is interesting. Sharp difference from Jan 47,000. Number 6, the June 32 puts, and number 7, like I mentioned, the Jan 50 calls. So someone out there, it's got a little bit of love for some upside out there in VXX. Speaking of love for upside, Mr. Meatball, a lot of people were hitting us up about this story, wanted to get our thoughts on it. I've got a lot of people running with this. I think Market Watch, CNBC, a bunch of people were writing about this. Goldman printing money back on February 5th and 6th. Go figure, right? Goldman had a good day that day. I think you could probably kind of assume that, but they got some numbers behind it now, saying Goldman made $200 million they say on a single day in February. They don't say which one. I think we can all assume which day it was here. And they were saying they pretty much made the lion's share of all of that off of their upside bets on the VIX. They said they had loaded up on that, and then, of course, when it surged 116% on February 5th, that worked out for their hedge fund and asset management trading arm. Let's see. This is pretty much. They have it broken down here. Yeah, this is pretty much their best day in quite some time here for Goldman. So there you go, Mark. I know you were worried that Goldman wasn't making enough money these days. Here's some evidence to the contrary, and they did it in VIX. What say you, sir?
Not surprised. That was definitely a unique day. My guess, I'm just going to go out on a line and say that they had a lot of kind of both ways. They were playing the gamma of VIX because VIX has already started to move around. So that was a pretty nice day for them. It's interesting. That also happens to be a day when a lot of other people lost a ton of money. Isn't that weird?
Yeah, Goldman makes money, news at 11. But,
no kidding.
I think there is some of this. I think you're right kind of to this, too, because they mentioned the hedge fund and asset management division. I think a lot of this, too, is Goldman taking down the other side for those clients, of all these clients scrambling to get short VIX, right? And Goldman says, we'll take it down, we'll take it down. So they end up, of course, residually sitting on a ton of long VIX onto the upside. So that ended up working out. They don't say how their clients did. I'm guessing not as well. But still, so when you're facilitating all that kind of flow, and it's very unidirectional and it actually works out in your favor. I mean, to their credit, they didn't dump it off. They didn't hedge. Not many places really to dump it off to at a certain point. That's kind of getting to be a bit of a saturated trade. I shouldn't say that out loud. Bill Valentine will get mad at me, but it was in terms of places Goldman could turn around and profitably lay that off for. So they knew they had to sit on a bunch of it, and so it ended up working out in their favor. In terms of earnings vol this week, not a heck of a lot lighting it up. We were talking earlier, we're kind of coming towards the end of the season. We were talking on Option Block yesterday about GPS, everyone's favorite navigational name. No, of course, this is Gap. They were closing yesterday right around 33 and change. They were pricing in about 2.5, 260 out there for the straddle, which was right around 8%. And looks like that was underselling it, because here in the today's trading, they're off about 4.5 handles. So not quite 2x straddle, but pretty close, about 14% off here in today's session. They got down as low as, well, they're pretty much right around the low right now. So they're not looking too good here for the folks at Gap. Mark, I know you're into the ladies' clothing retail. Is GPS on your radar at all, sir?
No, that one wasn't. But you know what I was watching was Best Buy and Foot Locker and Nike. Pretty amazing how crazy those were. Those Best Buy had great earnings and then took it on the chin. Meanwhile, Foot Locker blew it up, and their earnings were like unbelievable. So kind of interesting, right? And then the other one that was of interest to me was that Foot Locker moved Nike. So that was interesting. You know what trade I did see today that was that is interesting is the VXX Jan 28 puts. A customer bought a bunch of them for for about $4, and I told the guy, I go, ooh, I like that. That's not bad.
28 puts. So you don't see that strike getting a lot of love out there. You're right.
I see, but it's a nice level.
I see 2,000 of them going up for today. Yeah, they're about 4.5 at 470 now out there. Yeah, those are pretty juicy. Those were
I like them.
Those were trading far lower not too long ago. So maybe this guy, maybe this is this guy. He's finally starting to believe this is what the direction you want. He's kind of like your buddy Andrew. Yeah. He needs to move to play out a little bit before he dives in.
Yeah, and that appears to be what that trade is. There's a lot of open interest on that downside. I think there are a lot of people looking for that mean reversion, and if you look at where VVIX is pricing itself, you can make a pretty strong argument that there's a good reason, right? I mean, vol is doing like nothing right now.
Yeah, we had some potential shocks this week too. We had more, kind of talks on the trade war front, on the war front with Korea and everything. So there were some potential shocks. And then we saw VIX Cash flirt briefly with the 14 handle this week yet, but apparently that was not enough to move the needle much beyond that, because of vol coming back right in. And I'm sure a lot of people, probably not yourself and probably not even me, wouldn't be too upset if our friend here on the Jan 28 puts in VXX turned out to be correct. I would not turn my nose up at that fellow. I know you would not as well. Going back to earnings for a second, you're right. A lot of people were kind of up in arms about that Best Buy, because the narrative for Best Buy for a while has been, hey, they're turning it around. They're riding the ship. They're fighting back against Amazon, and they're showing the value of brick and mortar retail. They're trying to create experiences and stores within store and VR demos and little Apple stores and whatever the heck they had set up in there, and that was kind of turning the tide. And you're right, the numbers, they kind of reaffirmed. I don't think there wasn't anything dire, certainly, and yet they came for it, and they came for it pretty hard. And a lot of people I know were, I think, a little mystified by exactly what was. Maybe it's an opportunity if you're a Best Buy devotee out there. And you're right, some of these other names out there, Gap, of course, they're coming for all brick and mortar. Amazon's coming for all of them. at the end of the day. Certainly you might want to assume that after looking at some of these numbers for this week. You were talking about crude and the crude volatility space out there. Of course, our friend over there, OIV, the crude VIX, getting a little bit lofty again, right around 26 and a half. This is about 2.5 handles higher than where it was this time last week. So all this kind of fear, uncertainty, what the heck's going on? Myriad different things trying to drive crude in all different directions. All this kind of conspiring for a little bit of vol. But you know, if you've been watching crude for any length of time, you know that's pretty much nothing. We saw OIV much higher not that long ago, back in the go-go days of crude, shall we say, when it was a little bit more tumultuous out there. We saw it well into the 50s and beyond. So this 26, as elevated as it might be near term, not a heck of a lot to really get concerned out there. And of course, gold vol continues to just get annihilated. GVZ, the gold VIX, right around 10.5. That's a half a handle lower than where it was last week, which was a point lower than the week before. So it's just it's the continual story. We said it many times on TWIFO. You know, last couple of months, gold vol has been at or around 5-year lows. So there's not much left. You think every week they kind of squeeze as much as they can out of it, and yet they continue to squeeze out there. And you guys continue to ask us questions, so let's get to some of those with the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. You guys take the reins, your questions, your comments, your insights, your snide remarks for the meatball, all of the above. Hit us up at options or on the email or on the carrier pigeon, you know the deal. We also like to ask you guys questions. This week we asked you, we're heading into one of those holiday weekends. And you know what usually happens? They usually come for it. Today, not so much, which makes it kind of interesting. But usually the intra-week, they certainly did come for it, which makes it a little bit of a challenge for people out there trying to trade things like the VIX. How much is going to come off? Is it going to come off? So we thought, rather than ask the traditional question of where will VIX Cash close today, Friday, we thought we'd flip the script a little bit and go ahead and say instead, where will VIX Cash open on Tuesday morning after the holiday weekend? We didn't make it as hard for you guys as we make for ourselves. Here we have to be literal bullseyes on the crystal ball sometimes to win. Like myself last week. Nudge, nudge, tap on the shoulder. But here we made it a little bit easier for you. We gave you ranges. So you can pick right around here between the 12 to 14 handle, which is pretty much right in the middle of that right now. Or a little bit higher, 14 to 16. A little bit lower, or in this case maybe a lot lower, 10.5 to 12, or much higher, north of the 16 level. Mr. Meatball, what do you think? What is your vote, first off? And then secondly, what do you think our audience is feeling? Again, this is for the open next Tuesday morning.
I don't know. All right. I'm thinking that the Tuesday, since they're putting a little vol back in, I think we could be in a position to be down again on Tuesday, which is always fun. I think the audience is thinking that we're going to be lower. That's my gut.
So in the 10.5 to 12 range. Interesting. That's where our lower level is. That's our range, sir.
The 10.5 to 12?
Or here, 12 to 14, or higher, 14 to 16, or much higher, north of 16.
I'm going to say, I get it. I'm going to say the 10.5 to 14 is the winner.
Oh, 10.5 to 14.
Or the 12 to 14 is the winner.
Okay, there you go. That makes a little. 10.5 to 14 would be quite the range. And we're not quite that generous. We're pretty generous, not quite that generous. You're right. The audience agrees. The 35% saying we're probably going to be in that range. Since we're smack dab in the middle of it right now, pretty decent wager that we'll be somewhere in that range come Tuesday morning. I'm with you though. If they continue bidding this up here, going into the weekend, then you might see a little bit of reverse of the usual play. Usually they crush it, a little bit comes back after the holiday. This time, might see a little bit of the opposite of that. So it could be somewhere in that 12 handle. Of course, you want it to be by the end of the show, but we could definitely be there on Monday. 31% saying a little bit higher, 14 to 16. You briefly had your moment there. A couple of sessions ago, we got in that 14 handle, and then it all kind of went away. Lower to 18% saying about 10.5 to 12. 16% saying much higher. Doesn't seem like either of those, 30-odd% have much of a chance, but we shall see. Crazier things have happened. There is always that weekend risk, which we put in here to this poll. So take note. Like, we'll take note of you guys here. Let's see. James the first. We have royalty writing into the show. Mark, he says, I took a flyer on a couple of hundred VXX Jan 10 puts for 3 cents after learning about them on your shows. Well, there you go, James. He goes on to write, seems like I'm not alone, as a few 100,000 others appear to have joined the party. It's a fairly cheap roll of the dice on long-term VIX erosion without massive risk or expense. Well, yeah, you're right. Certainly cheaper than the $4 we were talking about for the 28s. And you're only, 18 handles different. So there you go. But you're right. We have talked about these before. These have kind of been a recurring discussion point back a lot farther back when they were 3 cents. We were talking about them when they were 30, 40. In fact, Mark, I think you had some of these a while back, right, with the Carmen line when they were like 30 odd cents, right?
Yeah.
You've been trading these for a while.
Yes, and I don't mind them as a purchase right now. I think that there's I don't think they're a terrible trade. Obviously, I don't know that they're going to be it's at this point a flyer. But, these were over 50 cents when VXX was, 26 the last time. So if VXX gets back into the low 20s, reasonably well on these. So, it's not the first trade we've seen.
Yeah, it's not crazy. We've seen certainly way worse flyers. James seems to have a good attitude on it. He's throwing a couple of hundred contracts at a 3 cent thing. It's not his entire IRA or anything like that. So yeah, if you want to take a spec on him and you want to join 200,000 others who are playing on this strike, to have at it. It seems to be a fun one. And you're right, these things can't. I don't think you're not going to get $10 out of it. But you probably can get you can get a 3x, 4x return maybe if we start drifting into these mid to low 20s out there in VXX land. These things could certainly catch a little bit of a bit. And you can get out for a couple of X. There are worse things out there, and if not, worst case, yeah, you only lost 3 cents. So there are worse things. Oh, more love for these VXX puts, Mark. I think we've sparked a contagion in our audience here. Malik says VXX puts to spec. Okay, here we go. It's a little confusingly written. VXX puts to spec on Contango and VIX futures makes sense to me. Do you think it's worth it to have a few VXX out-of-the-money call spreads in the back pocket as well to help protect or spec on a few reversals that buck the long-term trend, or is it just wasted money on anything bullish in VXX? Well, this is kind of what I was referring to earlier when I was joking that everyone says no one trades calls in VXX. That's clearly not the case. 72,000 hitting the tape today. More than puts, actually, out there in VXX land. And open interest-wise, they're actually closer than you might think. It's about 1.4 million calls open versus about 1.8 million puts. So, we talk a lot about the puts, and those crazy out-of-the-money puts get all the headlines and stuff. But people do trade the calls out there, which is kind of interesting. Mark, didn't you guys just did, I think, a webinar on something right along these lines, something along the lines of VXX made easy. So this is right up your wheelhouse right now. When you're in the process of making things easy, do you guys do any call verticals to hedge against your VXX puts?
All the time, especially if you're going to go near the money. Now, on some of our longer dated stuff, we might not hedge it off as much, but with VXX, I think the easier way to make money, the more surefire, is not just betting on contango. It's betting on movement. You get the movement from the contango and or the violent moves higher, but that is where we find value. And yeah, we did a VXX Made Easy webinar, and I'll tell you something. We walked through, a chunk of how and why to make how and why people can make money on VXX, and maybe why you don't just go super long. I almost said something else, but why you don't just go super long the VXX puts, because there are less volatile, more surefire ways to make money.
I can't imagine what else you would have said, sir. But yeah, so Malik, there you go. You got a whole webinar on this topic. If he wants to check it out, is it still available up there? Can he get the archive?
Yes, he can.
There you go. OptionPit.com. Check out the webinar. Good timing, Malik, on this webinar on this exact topic. Let's see. We got time for one more quick one here. Let's do a quick one here from T Greek. The Greek, maybe? T Greek. He says, thanks for the show. Well, you're welcome. Can you include a breakdown of OTC variance swaps on an upcoming episode? We've talked about this in the dark ooze of the show a few years back. We used to talk a little bit about this kind of stuff. A couple problems with that. Getting reliable data on that all the time is a challenge. You get it filtered through one lens, and you're not getting. It's not easy to see all the big prints going up, because obviously they don't want to share that stuff. So you can maybe talk to one house and get what one house is putting up, but getting a reliable kind of overview of all the paper up there is a bit challenging. So we haven't really wanted to relay kind of piecemeal info to you guys. And then also a lot of the big stuff sometimes is also reflected in some of the listed as well, so we can kind of get the kind of dark side, flip side of that by looking at some of the listed products to see what's going up out there as well. So that information is still relayed, just in different formats. But yeah, maybe it's time. Maybe we'll get some guests on who play on the OTC vol space and talk a little bit about what they're seeing going on. It might be kind of fun. Mark, you ever look at any shows out there in the variance swaps land? See what's going up there?
I'm always kind of interested in those variance futures that are still floating around. I don't, I'll hear tangentially about those things. I don't normally get a look-see. I'm not that I don't have the kind of size to take down those, because variance swaps typically trade in blocks of 1 million Vega. So they're not small trades.
Oh, is 1 million Vega a lot to you? I'm sorry. I thought you were sized up over there, sir. I
no.
1 million Vega, that's a morning, right? That's nothing. That's nothing amongst friends.
Right.
You're right. I think the last time we did really a deep dive on this was back when we had Jay Cowie from SIBO come on and talk about how they were kind of constructing their listed product to try to replicate the OTC, and there's been a lot of challenges with that product since then. We haven't really checked in, though, in a couple of years. Maybe it's time to do that. Tell you what was the name there? Whatever, T-Greek. Well, I'll do some digging for you and see if we can get some people on to look back in. It's been a while since we checked in. Might be a good refresher for all of us. Speaking of refreshers, I think VIX Cash is pretty refreshing right now. So let's go right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Mark, I hate to say I told you so, sir, but I did tell you so. In fact, I did it again. It's kind of scary. I'm kind of scaring myself now.
Oops, you did it again.
Another bullseye. 13. I'm off by 0.01 this time. 13.24. I said 13.25. But this is 2 weeks in a row of bullseyes. Is it starting to scare you? Are you starting to feel a little nervous, sir?
Yes, I'm not happy about this at all.
First you can't take down the big Vega. Now you're just. The bullseyes. It's kind of scary. What's going on here? I feel like some sort of Oracle of Delphi of all things VIX Cash. So yes, 13.24. It's interesting stuff here. Mr. Meatball was a half a handle away. Might as well have been a mile away. 12.75. We shan't speak of such prognostications again, because it's embarrassing, really, for all involved. I feel bad to know you. So instead, let's move on to where we're going to be next week. I'm going to go first, because I think I merited it. Once you get me, Mr. Meatball, you get to go first, but not until then. So we're looking here. We're coming out of a holiday weekend this week, so a truncated trading week next week. We did see some blips on the horizon this past week, but not enough to really conspire to drive vol higher. Let's see. Again, we're kind of rallying into the close here today, so it may come off a little bit again towards the end. I'm going to say I'm going to say a little bit shy again of where we are right now, but not a ton. I'm going to say 12.95, Mr. Meatball. So the erosion continues week after week. What are you feeling this time next week? Let me guess. 17.
No.
27.
I'm gonna say 12.95. Man, I probably would have picked 12.95. Let's say, well, I'll take the other side then. I'll say 13.50.
There you go. Going a little higher. Interesting. 13.5 listeners. We shall see if I can do it again. Third week in a row here with just scarily accurate on the old crystal ball. All right, that music means we've come to the end of another epic journey through the world of volatility. I want to thank our guest, Tom Lee from Parametric. Head on over there. You can also follow them on Twitter. Their handle is @Parametric LLC if you want to talk about all those custom overlays and harvesting the risk premium here on good old volatility views. And of course, if you want to check out all things like VIX Made Easy, or maybe VXX Made Easy, or maybe you want to learn how to not play in the crystal ball segment, you can learn all these things from Mr. Meatball over there at optionpit.com. Mr. Meatball, what do you guys got coming up in the land of the pit?
We're in the throes of our VXX Made Easy paid course. It's going really well. Next week, we're going to be doing directional option trading made easy. And that'll be a week from Tuesday. So be on the lookout to register for that. And of course, if you're looking for a smarter way to get exposure to the S&P 500 and you're an accredited investor, feel free to reach out to me, Mark, at Carmen Line Capital. I'd love to chat.
There you go. Hit him up, Mark at Carmen Line Capital, to learn more there. And of course, if you like what we were talking about a little bit earlier with all things commodity vol, stay tuned. Hang out. If you're listening live, hang out in the chat. We'll be back in about 20 odd minutes for a little bit of Twifle. In the meantime, we'll beam some fun stuff into the chat for you guys to sink your teeth into while you're waiting. And then we'll be back this time next week. We'll see if I can do it 3 times in a row. Drop the meatball here on with some bullseyes in the crystal ball. We'll see. Stay tuned next week for Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.